From TradeGuild.net. This is a video that is going to deal with a new site that I've got going on, and I'm giving people 2 weeks free access to it. It's a trading system that I've been using, and the gains on it are pretty spectacular. It's either long or short in the market most of the time, as you can see over here on DXO. Over here caught a big short move, over here got a big long move, and when it's going sideways here it's green. You're basically out of the market. The gains have been spectacular. If you go to TradeGuild.net and you look at the system, you'll see even with indexes it's doubling what the index is doing a year, and I'm not even going to tell you what it's doing over 9 years because you won't believe me. But if you go to the website and take a look, you'll see, and think you'll be pretty impressed. So anyway, some of the trades, DXO, we've been in for a while. There's this inverse head and shoulders thing going on here. We've made about 24% on this trade so far, but I think it's about time to get out. If we take a little closer look over in the last couple days, we see a loss of momentum. These small bodies, we got a little star here. It's almost a shooting star. You can see volume has fallen off over here. I'm just not feeling this trade right now. I feel like it's going to pull back. Over the long term, here's 3C, huge positive divergence. So this has got a lot more upside. It's just when we look at stuff like this hourly chart over here, you can see as it's making new highs over here, 3C is going down here. That's signaling selling distribution into this rally. So I think it's time to take the profits off the table on DXO. And the reason why I think DXO is done for right now, at least for a little pullback, is because the dollar over here looks like it's getting ready to bounce a little bit. Let me just jump in a little bit closer here. You can see that there's been a pretty good downtrend over here. If we take a look at 3C on the daily here, a little positive divergence right here at the bottom. So I think the dollar is going to bounce, and whatever the dollar does, generally commodities are going to do the opposite. So oil is going to do the opposite. So that DXO trade, I think it's time we're going to take our profits off the table. We were in CNQR. We made some money on this one, and I said, I think this is going to pull back. Let's take our profits off the table on this, and we're going to look at it again around 30. It's getting pretty close. You can see that there was a little formation here where it broke out of, and now it's pulling back to this area where we're going to probably reconsider this trade and maybe get back into it. Another one we're in on the short side, SWHC, Smith & Wesson. This one, to me, looks like it may bounce. We got an 8% gain in it already. Here's why I think it's going to bounce. This is a 5-minute version, and you can see that we've got a positive divergence over here. Price is pretty much going sideways. The indicators are going up. So we may see a little bounce. Now, that doesn't mean that we're going to close this position out, because basically what this position needs to do is pretty much stay under this blue line over here around 550 or somewhere thereabouts. Here's our actual stop, around the same area. So it may bounce up to that area, maybe a little bit higher. So I think we'll stick with this trade, and ultimately I think this has got a lot more downside in it. I think this trend is just getting going here as it rolls over. Next up is PETS. These are all positions that are in our actual trading portfolio. Again, over here, we're looking at the stop around 1550. PETS, I'm not really sure what's happening. Let's take a look at 3C real quick. See, we got a little bounce brewing over here, it looks like. And over here. And this is on a very short-term basis. Over the next couple of days, we can see price going down, the indicator going up. So there's been some short-term accumulation. So this may bounce, 15, 20 or something like that. Maybe a little bit higher. But our stop is about 1550. So I think we're okay on PETS. We'll keep an eye on it. But generally I like that. AIPC, I like this one a lot. And the reason why, let's just even forget about the trading system. It's just this top over here, nice top. It's broken down on big volume over here, and it's rallied back up to resistance at this area, and it's rallied on really weak volume over here. So this is the top, and this position, I think we're just going to stick with AIPC, and I think it's on its way down. If we take a real quick look at 3C, you can see on the daily here, I mean, it's just a total mess. You can see the negative divergence that called this top. This thing is just down. There's the little bit of bounce over in here, but ultimately on this hourly chart, it looks like that bounce is over. You can see over here it made a nice high, right? And then when it gets to the highs of price over here, it just starts selling off distribution over here, making a leading divergence. So AIPC, I think we stick with that position. One other long that we're in, CAT, CAT. For now, I think CAT looks okay. You know, basically, we're going to give this one a little bit more room here on this stop. So basically, you know, the stop is going to be in this area over here around 33.75 or so. It's gone above our blue line over here, so here's our buy signal back here in CAT, and it's run from 30 to 40 or so, 37.75 all the way up to 40, 10 points on that buy signal since April. So CAT looks pretty good. HANS, this we're definitely holding on to this one. It's broken down really good, and we had a little opportunity to get in on a bounce there, and we've had a real nice move, 36 down to 31.25, and I don't see any reason to mess with this. I think we got 7% profit in that one already. XING, there's XING. There's a line of resistance that it's broken through. That's actually a downtrend. You can see it's almost like an inverse head and shoulders, but it's definitely like a rounding base. You can see the rounding in the volume over here. It's broken out, it's pulled back into this little flag on very light volume. I like this a lot. I think this is going to move up quite a bit higher. And if we just take a look at 3C real quick, you can see this huge leading divergence. I mean, this is like making all-time highs here for the entire year, even though price is down at 235. It's higher than when price was up here in the 14s, 13s, 14s. So this position looks really good, XING. And finally, we'll just take a real quick look at the spiders. You know, I've maintained the whole time that I think this is a bear market rally. If you look back at 2008, at March to May, you see the exact same thing. We had a bear market rally, and it's starting to roll over a little bit over here. The volume has been not good. You know, on a trend that's moving up, the volume should be moving up, not moving down. And if we look at 3C, we can see, number one, we've got a daily divergence over here. We should be making higher highs here. We're not. We're making lower highs. Like the hourly, it's way out of sync over here. And here's a half an hour chart, which, you know, is productive for it gives you knowledge over what's going to happen over the next few days. So we've got a negative divergence. It's really, as it's made its new highs over here, this thing is just sunk down. Now that does not mean that in the short term we won't see a little bit of a bounce. Here's a 5-minute chart. There's a 10-minute chart. Let's zoom in on a 10-minute chart, and we can see on the 10-minute chart, okay, it's pretty much in gear, but over here we have a little bit of a leading divergence, strong close over here. May get a little bounce on the spiders. Maybe it runs up to 95.75, something like that, 96. Ultimately, though, I think, you know, get your shorts ready.